did Closing Bell. We were supposed to have it last week. I know we told you guys about it this morning. We're going up in the air, but with the holiday seasons, we got a lot of Closing Bells that are coming up. But we figured let's get him in here. I just want to do a quick intro about him and tell you a little bit about it. But I know he's got a lot of great content he wants to share with you. It's always nice to hear other people what they have to say of different markets. And I would never have somebody on here that didn't be able to help us and educate us a little bit more about it. Remember, what you hear on TV is not what you always hear when you hear from people like us that are on our webinars. But Matt is the head of research, and he oversees collective shift of analyst teams that produce quality content related to crypto assets and blockchain technology, which I'm a huge fan of that with the digital currency and with Web3. He has also worked full-time with crypto space since the 2017 started as a news reporter and independent analyst for Matt on Twitter. You can always follow him at Matt at Twitter, Willemsen Twitter. But without taking too much time away from him, I know he's got a couple of good things to talk about. He's going to go for, I guess, about 30 minutes to 40 minutes. So we're going to go out there and get him going. And in the meantime, Matt, welcome aboard. Welcome to Cybertrade University.
Thanks, Fausto. Glad to be here, and thank you for that intro. Just checking it's all coming through, all clear.
Yeah, we hear you loud and clear, Matt. Hear you loud and clear. Matt, where are you from again? They forgot to tell me again. I know you're not from the United States.
No. In Melbourne, in Australia.
I was right. Oh, okay,
yes.
Good. I was right. I was right about that. Good. Well,
Excellent.
Well, that's good to hear, Matt. So, Matt, tell us a little, just really quick before you get started. Tell us a little bit. What got you into the crypto and blockchain back in 2017?
Well, I just finished my Bachelor of Business at the time, majoring in economics and accounting. And before I went and joined one of the big four consulting firms or accounting firms, I thought I had been hearing about this crypto sort of asset class industry. I decided to do a bit more reading about it. Continued to see these jobs popping up to do with more like news reporting and just writing, copywriting. So eventually just threw myself into it and really just went down the rabbit hole, as I say. I think the thing that, to answer your question, what drew me into it was probably that intersection of economics mixed with, I suppose, like software development, mixed with, I suppose, a lot of cultural sort of overlaps as well when you go back and look at how Bitcoin in itself sort of started around that 2008 financial crisis. So that intersection of all those things really motivated me and really opened my eyes up. And I think I'm a lifelong learner, so this space always has new things coming out, which a few of them I'll touch on today. But that's basically what gets me out of bed in the morning 5 years later.
Well, you probably got. I mean, listen, you're a popular person after what happened with FTX. So a lot of people. Listen, I've been dealing with that when the financial crisis kicked in and everything else. So I'm not really, I'm not too much to be people asking me too much about it because I don't trade crypto, but I wanted to have somebody on there to kind of talk a little bit more about it. Because listen, I have an old saying here in the States. We always say, believe nothing what you hear and half what you see, So, but I know you have some good content you want to tell everyone, because I don't want to shy anybody. It's not. Listen, you can still trade crypto. There's still, it's nice. It's, what I always tell everyone this, Matt, where longevity, it's a good thing to get these bad actors out of here. On the short term, it's a lot of egg on everyone's face. We all look bad. Listen, even in my industry, there are educators out there that, promise the world, and it just makes us all look bad. Long term, it's the best thing to happen to us, because you know what? Eventually they'll be gone. There's bad actors and everything. But don't want to take too much time. Matt, why don't you go ahead and take over? Are you going to be sharing us a PowerPoint?
Yes, if possible.
Yeah. Okay, go ahead. You should be able to take over the screen.
All right, terrific. And looking forward to getting into some questions as well. I'll probably keep about 15 minutes or so for audience questions. Because I know there'll probably be quite a few to do with FTX and whatnot. I'm just getting this set up. Okay. Alrighty.
Do you have the button up there on top to share screen?
Yes, yeah, I do. Just a moment.
There you go. You should have it now.
All right, terrific.
We didn't make you a co-host.
Thanks for that. Yeah. Cool. Okay. Should be good to go. Okay. Well, yeah, thank you for joining me, everyone, and for that intro. As I said, happy to get into questions. I'll probably go for about 20 minutes or so. Then, yeah, really looking forward to getting into some questions with you. And thanks for those comments coming through on the Zoom chat. And I'm sure if there is a YouTube stream as well, I'm sure Fausto will be able to help me out with getting some questions through. So keep putting them in. But in the meantime, I'll give you an overview of where we're at the crypto markets and sort of what I do at Collective Shift. So to start things off, I think as we sort of touched on, I think every collapse, yes, it's painful to go through. I think we've seen a lot in the software, in the equity sort of space as well this year, biotech and traditional tech. But then particularly in crypto as well, has been huge drawdowns. But for those waiting on the sidelines, I strongly believe this is a generational wealth opportunity for those who are patient enough. And as I said, I wouldn't be here 5 years later if I really had lost faith in the space. So I'm definitely not in that mindset, and I'm here to tell you why, I suppose, in this slide here. So just to recap. Yeah, I oversee just a team of analysts here at Collective Shift, and we deliver actionable insights for our subscribers who are mostly retail investors and some institutional investors as well, who rely on our content to basically keep them up to speed with what's happening in the market, as well as the industry, to do with things like regulation and whatnot, all things that ultimately end up impacting the price of, well, Bitcoin, ETH, and the whole size of the crypto market. So really enjoy what I do, and hopefully can convey that in the coming 30 minutes. So definitely, like every investor and all of you listening, you've probably done a lot of things right and a lot of things wrong in previous market cycles, whether it's to do with crypto or not. Some things that probably mistakes I made moving into the space when in my younger days was just things like not capital management or capital mismanagement, dollar cost averaging, but not actually, kind of going in too hard too early was definitely something that it's almost like a rite of passage in the crypto space, so they say. So I'm happy to kind of go through some of those with you and share with you some of my investor knowledge, as well as my knowledge of what's happening in the market. So yes, I do believe there is a window of opportunity around the corner after what's all gone on the past few months. And happy to share my investment strategy with you towards the end and also in questions. But the main thing I'm here to talk about today is where the market is currently at. So we've seen Bitcoin and Ethereum probably down about 70% or so from their highs a bit over 12 months ago in November 2021. It's drawn down more aggressively than the likes of the NASDAQ and other tech stocks, as many of you would be aware. But these sort of drawdowns are pretty consistent with previous market cycles, particularly in the crypto market, which, Bitcoin, yes, has been around since the very start of 2009. There probably wasn't a market for it since about 2012 is when probably the first Bitcoin exchanges started coming out. And then most of the crypto assets we know today are built on Ethereum, which, look, that launched technically in 2015, but really didn't get up and firing up until about 2017. So we can use previous market cycles to kind of draw similarities and distinguish like between them, but this cycle is very different. I think one of the main takeaways I would like to communicate with you today of why this cycle is different is just the amount of pure capital, whether it's human capital from people leaving their Web 2 careers, or even academics getting involved in the space, and plus the amount of venture capital that's kind of entered the market since the previous market cycles. So that's basically where we are at right now. The markets are and industry, as we touched on at the start. The industry more so is sort of hurting a lot the past few weeks. I'm not gonna lie to you there. The markets are, well, this is almost in my opinion. I'll get to this soon, but in my opinion, the recent collapse of FTX, as many of you have probably been reading in the headlines about it, the sell-off in Bitcoin and Ethereum, and all crypto assets, surprisingly wasn't that deep. And that's one thing I really want you to sort of remember when you're thinking about when is a good time to either get involved in crypto or indeed just traditional stocks. When there's seriously painful news and just shocking news, and you don't see that much of a sell-off, it's a pretty strong indicator, in my opinion, of seller exhaustion. So I'll get into it a bit later in terms of timing the bottom and what I'm going to be doing in the next 12 months. But one thing to note there about the collapse of FTX and the impact it had on the markets was negligible, but the impact it's had on the industry is severe. Why is it so severe? Mainly the former CEO and co-founder of FTX, SBF is his acronym, or Sam Bankman-Fried. He's I think the most significant part of this collapse is we'll get to this, Jack. But yes, SBF has basically had a massive relationship with politicians drafting up, or at least testifying before Congress, and helping draft crypto regulations. Just wanting to communicate with you that from the industry side of things, I see the collapse of FTX from the regulatory sort of space. I think that's probably the bit where it's hurt the most, from in terms of the public perception and from the policymakers' perception of I suppose crypto has really been damaged. But happy to get to more of that in the questions. Crypto prices have plummeted. Obviously, we're all well aware of that. There's been a series of sort of liquidations and cascading effects dating back to April or May. And that's essentially all amalgamated and led to this sort of huge collapse of FTX just in recent weeks. In terms of when the markets are going to stop hurting, particularly for crypto assets, we've seen this year it's been heavily tied and heavily correlated with macro conditions, as many of you would be aware of. So it's my belief that it's going to be that reversing of macro conditions, or an easing of monetary policy, or at least not tightening as aggressively, that I strongly believe will sort of lead crypto out of its current winter that it is in. Moving on in terms of it's pretty doom and gloom, but we're also seeing institutional interest continue to grow. That's one thing, again, I want to emphasize in this. Again, 5 years working full time, living and breathing crypto. If there weren't signs of light at the end of the tunnel, I might have moved on by now, but I'm not even considering that in these current conditions. One big reason for that is institutional interest, and not just interest, but actual product development and product and services coming out by these household names, entering the Web3 space or the crypto space. Fidelity, they've been a pioneer of sort of getting involved in crypto since about 2015. They are, as many of you would know, one of the world's largest asset managers. They just last week, amidst all the turmoil, launched their crypto trading app for retail investors. So again, just more validation, helping to legitimize the space when you see the likes of Fidelity getting involved. And they've done a lot of work with crypto in the institutional side of things in terms of their offerings for institutional clients. But in terms of now going onto the retail path and offering crypto to get onboarded into the asset class really easily and in a familiar user experience. That's something that has definitely made me bullish for moving into 2023 and beyond. We've seen Google continue to move into their space. They've actually got a whole Web3 division now that is helping running, node infrastructure and just core blockchain infrastructure for many different blockchains, or at least supporting many different blockchains like Ethereum and Solana. And just recently, they did a deal with Coinbase Commerce to accept payments in crypto as well. Then we've also got here as well, Berkshire Hathaway has invested in a fintech company called Nubank, very focused in the Latin American sort of region. They will be launching their own token next year on Polygon, which is another sort of blockchain that I'll get into soon. That's one that I'm really going to be focused on next year. But again, these are just 3 examples. But to be honest, I could have gone on with dozens more. Every week there are more examples coming out about companies getting involved in crypto. Another reason why I suppose I'm more bullish, despite the price action, is the developers. At the end of the day, blockchain is a software, and you need to see, in my opinion, growth that developers are adopting these blockchain, these smart contract languages. Because if there was just stagnant growth and there weren't really developers interested in it, that's a strong signal to just us as retail investors that there really isn't that much legitimacy or that much that's overly exciting about the technology. Yes, there could be marginal improvements versus just a database or something that's already provided by the likes of Amazon and Google and whatnot. But if it weren't for that, then I'd be a lot more bearish, but that's definitely not the case. So just in the first half of this year alone, we saw 40% growth in the number of smart contracts deployed on Ethereum. So again, a very mature, market leading blockchain in terms of the smart contract optimized blockchains. So that doesn't include Bitcoin. So Ethereum already being the leader, and then to grow another 40% in terms of just smart contracts deployed, just in the first half of this year has been, that even surprised me, to be honest, hearing that report from Alchemy. And then, there's just more growth, more than ever, in terms of just Web3 development, which you would expect to see if this asset class and industry was to indeed deliver on what a lot of the promises that, a lot of these teams and startups are building. A major theme from this year in terms of where we're at in the market is Ethereum, the number 2 crypto asset by market cap, Bitcoin being number 1. They achieved a really significant upgrade in September, and the Ethereum developers have been working on this for about 4 years now, and they finally deployed this upgrade. I won't go into the details, but it significantly, I suppose, from an investment case, increased the investment case or made it more attractive for investors. It's just got to do with the issuance, all right, how much ETH is entering the supply every year, or every day, but on an annual basis. The amount of ETH entering the supply, so increasing the supply, that fell by about 90% on an annual basis. As a result, one of the results of this upgrade, it definitely wasn't the focus of it, but one of the side effects of that, really improved the investment case, in my opinion. And to see them execute this upgrade without any major problems, it went off without a hitch. That as well, really helped me and helped the whole market be a lot more confident in what Ethereum is aspiring to do in 2023 and beyond. Just a reminder that I will get to questions in about 10 minutes or so, maybe less, and I'm happy to address those. So if you pop them into the YouTube stream or the Zoom chat, I'll happily get to those towards the end. 4 cryptocurrencies that I myself, and as well as the analyst team at Collective Shift, are closely watching for 2023 and beyond. The first one, it may seem obvious, but in our opinion, too many investors get swayed down the path of the altcoins, which are, the cryptocurrencies that are a lot more speculative. But let's be honest, Bitcoin is still the one of the several cryptocurrencies to be paying attention to. It will lead, in my opinion, it will lead the crypto market out of this winter that it's currently in, these gloomy, doom and gloom sort of market conditions. It will be the one that will sort of lead the pack, in my opinion. So just we've got these on-chain analytics. So these on-chain analysts, they basically work full-time reading, interpreting all of the data that's happening on these public blockchains such as Bitcoin and Ethereum. One of them that contributes to Collective Shift a few times a week. He brought up this stat recently. So there's this metric on Bitcoin called MBRV. It's a very popular metric that historically over the course of Bitcoin's lifetime has been a strong indicator of, I suppose, a timing of when to buy and when to sell. Well, just last week, or just last month rather, it's this metric fell below 0.6 for the third time in Bitcoin's life. So again, a really strong signal historically of a time to buy into Bitcoin, or at least another sort of indicator to suggest that this is a good time to be buying. The market cap, the market value is essentially just taking Bitcoin's market value, so 16,000, 17,000, and then you multiply it by the amount of Bitcoin that's in circulation. So I think that's about 19 million these days. So that's just your typical market cap. The realized value is the value of every single Bitcoin recorded at the value that investors or any holders of Bitcoin purchase that Bitcoin for. So it's probably reflected as more of a true reflection of the value of Bitcoin, because it doesn't take into account all of the unrealized profits and loss. So again, these on-chain analysts kind of go pretty deep on their metrics, but this is one that's heavily sort of looked at by institutional investors and retail ones. Ethereum, I've covered that a bit here, but I'll quickly just get into why next year I'm looking forward to it. So again, as part of that major upgrade that I just referenced, it also enabled staking. So all staking is you take some of your ETH, in this example with Ethereum, you take some of your ETH, you lock it up in a smart contract. And for doing that, you are helping to secure the blockchain. And you are also incentivized to, I suppose, act honestly, because if you act honestly and secure the network in accordance with the protocol's sort of specifications, you will be rewarded with additional ETH. So this has never been able to be done with Ethereum up until September. So yeah, now investors, particularly institutional ones, are sort of really cottoned on, or it's captured the attention in terms of just being able to get a bit more of a predictable inflow of additional ETH, rather than just passively holding the ETH, which you would have had to do in previous years. Again, just talking about that supply dynamic, we saw that the new ETH entering the supply has fallen by about 90 to 95%. And with that effect, you're also getting this sort of situation where over a course of many weeks or many days, there are, depending on the activity of people using Ethereum, you get these situations where the actual overall supply of ETH is falling. So we're calling that net deflationary, because there's a certain amount being burnt or destroyed, and there's not enough new ETH coming in to keep the supply constant. So again, more scarcity is, again, a very attractive investment quality. And again, these upgrades don't stop for Ethereum. The next major one will be in the middle of 2023. Happy to discuss that more in the questions. Next one is Polygon, which I touched on earlier. They by far have the best business development team in the crypto space. So they're partnered with and integrated with the likes of Meta, Reddit, Disney, Starbucks, and Nubank. There's probably a dozen others that I could use it as an example there. But what is actually Polygon and what is it trying to do? It's essentially a solution, a different blockchain that's connected to Ethereum, but its whole aim is to try to make transactions incredibly cheap while still being secured by Ethereum. So a lot of the sort of drawbacks and criticisms of Ethereum over the years has been that it's incredibly expensive. Whenever it gets an increase in activity, a bunch of people want to use it. When that happens, the fees go up. So there's a bunch of different scaling solutions being worked on. Polygon is one of them, and they themselves have 5 different teams working on different solutions for scaling Ethereum. So again, it's just a bet on them being able to be at the forefront of, I suppose, connecting and partnering with different traditional businesses, but then also having the technical chops to be able to build a solution that's used by the masses around the world. And just finally here, Illuvium is another one that we're watching closely at Collective Shift. So ILV is the ticker there. We hear a lot this year in particular about how blockchain gaming is going to be the next big thing. Still, proof remains to be seen whether that will happen, because the nature of games, as some of you would be aware, games take many, many years to fully develop and to release. So we've seen a lot of these crypto gaming startups sort of launch, and they've raised a bunch of venture capital, significant venture capital, but the reality is their software takes and their games take a lot of time to build. But Illuvium is probably the one that is almost a canary in the coal mine. It's the leader in terms of the best technical team and raised, like, they're very well capitalized, but again, not launching. They'll probably drip feed the launch in multiple stages starting next year. So again, just one to watch heading into next year. If put it this way, if blockchain gaming is going to become as big as what people are saying, I would be very surprised if Illuvium wasn't part of the picture. And just some tips for security. You can get more into that in the questions, but again, this year has shown us many times just the drawbacks of having your cryptocurrency with a third-party custodian. The most popular of those being exchanges such as, Coinbase, Gemini, Kraken, FTX. These are all exchanges that they do a very good job of, being able to convert your US dollars and buy some Bitcoin or Ethereum. But if you're leaving your Bitcoin and Ethereum on there, it's technically not yours. You would have to then transfer it off into your own custody by getting a wallet, such as a Ledger or a Trezor. They are just picture them like USBs. They're little devices that you can connect and transfer that cryptocurrency into your own custody. Very important, because unfortunately, the likes of FTX, if they collapse, now you've got 1 million plus creditors in a bankruptcy procedure that's going to take up to 10 years, likely. So, and again, they're very unlikely to get all of their cryptocurrency back. So just a reminder there that I did want to touch on. So yeah, just to recap my investment strategy for the next 12 months, I personally just purchased my first Bitcoin and Ethereum for 2022. I did that last week. I've been communicating with members why I'm holding off. And I'm glad I did hold off this long, despite some members being a bit antsy with me, trying to convince me to buy earlier. I'm happy I held off, because the contagion risk of the many events we saw earlier this year were, at the back of my mind, that we still could see some more pain. And unfortunately, that happened a lot more extreme than what I thought with FTX, but it nonetheless happened. And that was enough for me to buy in for the first time. And I'll continue to accumulate over the coming months, particularly starting with top tier cryptocurrencies like Bitcoin and Ethereum. Institutional interest remains, and I'll also put in there the developer activity continues to increase. They were 2 big, I suppose, green lights and bullish indicators for why I think this crypto asset class has a lot more to offer. and yes, the next 12 months can present as a generational buying opportunity. I believe it does if you choose the right ones. But happy to get more into that in questions. Just a bit about what we do at Collective Shifts, as you probably known. Yeah, we get a lot of questions about people who have invested into crypto, but they can't keep up to date with everything that's going on. So yes, we're here to help you and to keep you up to speed. We do have a bunch of a good mixture of new and experienced investors in the community. We also have an online community where people are able to comment with our analyst team, including myself, and they're also able to network with other crypto investors. I've got a case study here. This is Indigo, a typical example of, I suppose, what we aim to do at Collective Shift, where, you know, she came into the space following this sort of suspect information on YouTube and other free sources where the quality of the content isn't great. She started using Collective Shift after that, followed our strategies and our best practices, and was able to double her portfolio. So we do have an offering here today for our new family here at FinMC. So a bunch of these different resources that we've put in over the years normally will be valued at 265 US. We'll also throw in a crypto investor checklist, which again has been curated over many years of experience by the team. And then also a guide to how to stake your crypto. Staking is a verb that you will keep hearing about over the coming years. So we've got a guide there to help you understand what it's all about. So for the total value of $409, we will be offering for the community and the listeners here who have kindly showed up and who I hope I can answer some questions for in a minute. We will be slashing that by 90% and offering that just for $7. So I'll keep that QR code there on the screen for anyone there to scan with their smartphone, or you can head to the link blueprint.collectiveshift.io. I believe that was it. I'll get that QR code back up in a minute. I did just want to emphasize as well that there is a 60-day guarantee. If you're not happy with any of the content or you didn't find it helpful, you can get a full refund by just contacting our customer support in our chat function that is on our website. So I will leave that QR code up there for listeners to scan, and I'm happy to get into some questions. Alrighty.
I have some questions for you too, Matt. I mean, obviously the big question is, I mean, like, everything that you mentioned sounds awesome, and a lot of people that looking at this would do it. But, you know, obviously with all the scrutiny coming around, what is going to change? First of all, is this going to get regulated?
Yes, I think as I mentioned, that's the big concern is probably the regulators' patience or even perception of the space. Will they come out with some hard-hitting regulations that essentially force a lot of the US domiciled crypto companies to either shut down or to move offshore? I still like to answer your question. It will be regulated 100%. I hope it does. Why? Because if it doesn't, it's probably a sign that the asset class isn't even that big and isn't even something to bother about. So it will definitely get regulated. There's a bunch, the Biden administration has put out a memo for several sort of reviews and reports to be coming in actually in the coming months. There's already been a couple that have come in. And then after that, I would say it would go through the Congress and be debated. But to answer your question, there has been a lot more, I suppose, support and representation of crypto in Washington over the past couple of years. Unfortunately, SBF was one of them. But in terms of the US, like going hard on crypto regulation, I still don't think that it is in their best interest to go hard on regulation, just because of the economic value that would kind of force offshore, and it would really, I suppose, put thousands of US citizens out of work, and the backlash, I think, would be quite extreme if they were to go super aggressive and to really rule out and shut down all these exchanges.
Yeah, I mean, listen, I tell everyone, Matt, that regulation is not a bad thing. It's a good thing
Mm,
because,
100%.
yeah, it weed out a lot of all the bad actors and stuff like that. Listen, I grew up back in the day with the penny stocks, and
Mm,
with all these chop shops back in the early, late '90s, and stuff like that. You heard the movie The Wolf of Wall Street?
mm,
Yeah.
mm.
So I mean, it's stuff like that, and then like obviously, once they got burned, they became a lot more strict with penny stocks and Nasdaq National, and Nasdaq took a lot of heat from that, and it really just gave people a lot more confidence of what stocks are for real and whatever and broker terms. So yeah, I think that regulating and so I'm a big fan of what you're saying. I think first I'm a huge fan of blockchain. I really think that's the
Mm.
future. I think it's Web3. I was actually looking to explore it even myself to do it with CTU, with with the NFT, as in digital assets moving forward, and paying with crypto is gonna be great. So listen, guys, I mean, to $7, how could you go wrong? I mean, what's the worst thing that could happen, right? I mean, Matt, you go in there, sample it out, $7. I do something very similar like that, and just want to get people, some serious people in there to get in there. 60 days guaranteed. Like you said, if you don't, you get your money back. But he's looking for serious traders in there, just like how I'd look for the same. And you know what? If you want to know the real truth, here's your opportunity.
Yeah, that's it. I think it's a perfect point on regulation as well. I think there is a question here from Ravina. Isn't the purpose of crypto not to be controlled by others? Yes, yes, that is I suppose the point of a permissionless blockchain, which anyone can come in and run a node and help secure, and anyone from around the world can use to transact and send well money or tokens to other side of the world to their family or friends, and various other applications. But ultimately, if this industry is going to grow up and mature and be adopted by the masses, it has to be regulated. And that's one thing that's happened, yeah, on the on ramps and off ramps in particular. That's all that a lot of government's concern is on the anti money laundering side of things, and KYC, in terms of just helping them understand who is putting their money on exchanges and who is withdrawing it. I think that's a fair enough requirement from them, given their other requirements in other industries which are similar. So yeah, that's the main thing that I think will happen. And just on the point of FTX, it's almost a symptom, unfortunately, domiciled in the Bahamas and other surrounding areas of their many entities. It was almost a symptom of US regulation, you could argue, not being more rigid and more comprehensive on crypto. If it had already come, you could argue that a lot of FTX customers wouldn't have actually even used FTX. They would have used the likes of Coinbase or Kraken, where there was a bit more clarity on on what they could do. And it would have actually enabled them to be more competitive with FTX. But that's just a side comment. That, yeah, I suppose we'll never get to the bottom of, because it's hard to prove. But is there any other questions coming through on the YouTube stream there? I've got some more in Zoom, but
No, we're all on Zoom pretty much. I don't see any on YouTube, but mainly just on right here in the
okay,
Zoom.
yeah, yeah. So yeah, isn't FTX done? Yeah, well, yes, the entity still technically exists, but it's in the hands of bankruptcy lawyers and liquidators, essentially. So yeah, that bankruptcy case will take, yeah, upwards of 10 years, in my opinion. It's arguably the most complex bankruptcy case in history, in corporate history. Over a million creditors, so many different jurisdictions involved. It's going to be, yeah, quite a nightmare, unfortunately, for all the customers. But yeah, that's kind of why I emphasize, get your funds off of exchanges, or if you aren't in crypto yet and you buy crypto like Bitcoin or Ethereum on an exchange, do remember to take it off the exchange, into your own custody.
Yeah, and you're going to teach that how to do that. Is that correct?
Yes, we have several of those guides of how to do that, in our blueprint offering, and then also in our community. You can come and ask if you did have any follow-up questions as well about how to do that.
Yeah, good, 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 good. All right, well, with that said, Matt, listen, it was great having you on, and you know what? It's a great deal, and everyone wants to know a little bit more about it. Hell, I'm going to take advantage of it myself because, like I said, like I'm a big fan of it. Um, Unfortunately, with these catastrophes, I always tell everyone makes a big opportunity. That's where, listen, if everyone here remembers Bernie Madoff, he was the
Mm.
biggest, Ponzi scheme. And personally, this is bigger. I think this is bigger in a way of, kind of like now you got major politicians involved. And I think that, you could see how money can buy power. But as long as the same thing happened with Bernie Madoff, as long as you got power and you could buy people off. I mean, the SEC was had renting space in his office. I mean, I'm talking about slipping through their nose. So I think there's a lot more to come out that we know about, but you got to be prepared because, like I said, still a big fan of crypto. I think it's still going to be there. And now you get some of these bad actors out of the way. I think it's only going to help than anything. But with that said, Matt, thank you so much for coming, Matt, on today. And like I said, so, with the short notice and everything else, and we'll look forward to having you back.
Yeah, it was a pleasure to help out the audience, and I hope some of you or a lot of you got value out of it, and yeah, we'll look forward to doing this again, hopefully when markets do recover as I predict them to do next year. But yeah, we'll be covering it all over at Collective Shift, so I look forward to seeing some of you over there.
No, same here, Matt. Thank you for having. Thanks everybody for coming. I'll see you tomorrow morning, bright and early in your trading room.